Hello, let me introduce myself. Amelia Putri, Class MNJ23C. NPM 234111027. Consumer financing and pawnshops are two financial services that focus on providing funds or capital for consumers. But both have different mechanisms and objectives. Here is an explanation of each. 1. Consumer financing. Consumer financing is a form of financing provided by financial institutions to individuals, consumers, to meet consumer needs, such as purchasing goods or services. Consumer financing can be provided in the form of loans or installments, either without collateral or with collateral. This financing is usually used for personal or family purposes, such as purchasing vehicles, electronics, or home improvements. Types of consumer financing: unsecured credit, KTA loans provided without collateral, usually for consumer needs such as home renovations or education costs. Home ownership credit, KPR financing to buy or build a house, with collateral in the form of the property purchased. Multipurpose financing, financing that can be used for various purposes, both consumer or productive, with collateral usually in the form of property or vehicles. Leasing, financing for the purchase of certain goods, such as vehicles or office equipment, by renting and paying in installments. Characteristics of consumer financing, generally provided by non-bank financial institutions, banks, or other financing institutions. Payments are made in installments over a certain period of time, which may vary depending on the type of financing. The application process is relatively easy and fast, with requirements that are not too strict, depending on the type of financing. Some consumer financing products may be subject to interest or administration fees that must be paid by consumers. 2. Pawnshop. A pawnshop is a financial institution that provides financing services by pledging valuables, such as gold, vehicles, or electronics, to a pawnshop to obtain cash loans. This mechanism allows consumers to obtain loan money without having to sell the items they own, simply by pledging the items. Types of services at pawnshops: conventional pawnshop, financing with collateral in the form of valuables such as gold, vehicles, or electronics. The amount of the loan depends on the value of the pawned item. Sharia pawnshop, financing with Sharia principles that use ijara, rent, or murabaha, sale and purchase, contracts where consumers can still obtain loans by pawning goods, but with an interest or margin system in accordance with Sharia principles. Gold savings, a service for saving gold periodically, which can be cashed in when needed. Characteristics of pawnshops: collateral, loans at pawnshops are always based on collateral. If the loan is not repaid within the specified period, the collateral will be confiscated by the pawnshop. Fast process. Pawnshops are known for their relatively fast process in providing loans, because they only require proof of collateral, without the need for a complicated verification process. Interest or fees. Pawnshops charge interest or fees that are calculated based on the loan value and the length of the pawn term. The loan term at pawnshops is generally shorter, several months, and can be extended if the consumer still needs funds. Key differences between consumer finance and pawnshops. 1. Collateral. Consumer finance can be provided with or without collateral, depending on the type, e.g., unsecured personal loans. Pawnshops always involve collateral in the form of valuables provided by consumers. 2. Purpose of use. Consumer finance is generally used for the purchase of consumer goods or services such as vehicles, houses, or household furniture. Pawnshops focus more on providing loans by pledging personal items to get cash quickly. 3. Process. Consumer finance generally involves a more formal application process and requires checking The credibility or credit history of the consumer. Pawnshops tend to be simpler and faster, as they only require proof of ownership of the pawned goods. Conclusion: both consumer finance and pawnshops are financing solutions that help consumers get cash, but in different ways. Consumer finance is usually more flexible and for purchasing goods, while pawnshops prioritize collateral and provide loans with a fast process.